Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a 10K report, and trust me, this one has some interesting twists. It's like watching a magician who keeps pulling rabbits out of a hat, but you're not quite sure if they're real rabbits or just fluffy toys. This time we're looking at Reliance Global Group, a company trying to make waves in the insurance world. Think of them as a tech-savvy player aiming to shake up how insurance agencies work and trying to make a new business out of buying small insurance businesses, so let's see how they have been doing. First off, you'll see their official filing with the Securities and Exchange Commission. This is where they lay out all the important details about their business, financials, and risks. This report covers the year ending December 31, 2024, so it's a look back at how they performed over the last year. Reliance has launched something called RELI Exchange, an InsurTech platform. This is basically a fancy way of saying they're using technology to make insurance easier. They're trying to make it simpler for agents to manage referrals and track clients directly. They also launched a beta version of their advanced quote and bind solution, using automation and AI to speed up the process of quoting and binding commercial insurance policies. The company is making advancements in its tech capabilities that support agents and clients. One of their main goals is to compete at a national level. They want to be a big player, not just a small fish in a big pond. They also believe they're unique because they offer the personal touch of an agent combined with the convenience of online services. They're trying to bridge the gap between old-school insurance and new-school technology. They're trying to get all of their owned and operated agencies to work together smoothly, sharing resources and knowledge, and want to call it one firm approach. The goal is to increase their market presence, improve relationships with insurance carriers, and create more opportunities to sell different types of insurance policies. They made a deal to acquire 80% of Spetner Associates, a benefits enrollment company, for a mix of cash, stock, and promissory notes. The plan is to eventually buy the remaining 20% based on Spetner's future earnings. They have been actively amending this deal. The last amendment says Spetner is worth approximately $16 million. The company expects to leverage synergies Spetner will provide for its other subsidiaries by means of integration and harnessing cross-selling opportunities. The company reduced the quorum, which is the minimum attendance, needed to hold a shareholder meeting from a majority to just 33%. This essentially means it's now easier for them to hold meetings and pass important decisions. The company has significantly increased the number of shares they are allowed to issue, from roughly 117 million to a whopping 2 billion. It gives them a lot more flexibility to raise money or make acquisitions by issuing new stock, but this can also dilute the value of existing shares. The report emphasizes several key issues insurers face, including mergers and acquisitions, technology, product development, and talent management. They believe that with interest rates rising, mergers could be a way for smaller agencies to scale up and adopt new technologies. Now let's talk numbers. For the year ended December 31, 2024, Reliance reported total revenue of approximately $14 million. That sounds like a lot, right? But here's the catch, they have a ton of expenses including commission, salaries, and other administrative expenses. All in all, it means a loss from operations of about $7.7 million. They need to cut costs. They have a bit of cash to keep things moving, around $1.8 million, but a lot of it is restricted, meaning they can't just use it for anything they want. Their CEO has some significant connections to the company. As of March 6, 2025, their CEO owns 3.47% of the company's common stock. There's also a credit agreement with Oak Street, which says that as long as those loans are outstanding, key positions in the company must be filled by specific members of the CEO's family. This could create a conflict of interest or limit the company's flexibility in hiring and management decisions. The company acknowledges that cybersecurity attacks and technological changes are significant risks. If these problems were to succeed, it could significantly interrupt the company's operations. Reliance's debt agreements contain covenants, essentially promises that limit what their management can do. It's like having a financial leash that prevents them from making certain moves, even if those moves could potentially benefit the company. Preparing financial statements involves a lot of estimates and judgment calls. These estimates could be wrong, and if they are, it could mess with the financial picture that's being presented. The filing discloses a series of recent sales of unregistered securities. Selling securities without proper registration can lead to legal and financial trouble. Scroll inflation. Scroll. The company's business could be adversely impacted by inflation or increase of prices. They admit that the insurance market is super competitive. They're up against big insurance companies, tech companies, and even banks that are all trying to grab a piece of the pie. They have to comply with all sorts of promises they made in their debt agreements. If they don't, they could face serious consequences and their business could be in trouble. This section is a list of all the documents attached to the report, like the company's financial statements and legal agreements. It's like the appendix of a book. So, what's the verdict on Reliance Global Group? There appear to have competent management and a clever focus on InsurTech, but the company needs to address key risk areas in a real way. Their high debt and limited access to capital. Their leadership structure, while stable, could raise questions about governance and flexibility. Reliance is definitely one to watch because if they are able to manage their risk, control costs, and keep up with InsurTech, I think they have a bright future. Thanks for watching. If you enjoyed, please subscribe, like, and comment.